Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Take a look at Hang Seng. It is trading lower by almost 0.3%.
He remains united in pursuing our dual mandate goals.
130 is that level for the as far as the support is concerned.
We said HFCL could potentially come out of the FNO ban. Precisely what happened. So that's one stock you keep on your radar.
We hope all success in our long-term journey with BCCI.
About 0.4% higher on the Nifty. That's the Bell, and 25,436.
There are still more downgrades that have happened in the last 1 month since the GST announcements.
Inflation for the RBI is not the issue right now.
Block deal overhang as well as the Form 483 is something that is weighing down on the stock price today.
Today, we are comfortably above 25,400. In fact, we are building onto those gains as we speak.
Mother-son, every 5 years we come out with an audacious 5-year plan.
The steel industry, things continue to be challenging simply because China continues to export 9 to 10 million tons of steel every month.
Markets are off the day's high, so it's a 40-point uptick that we are seeing on the Nifty currently.
Well, it's a quiet day after big rally coming into today's session. So 14 odd points, 25,346. But nothing to worry, because broader markets, lots of shooting stars once again, which is going to be the focus here over the next 60 minutes, because index-wise, it's quiet. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surabhi and Rima here in the studios, and Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, afternoon. The start was a lot better, right? We were up in the green. The Nifty had scaled, almost gotten to levels of 25,450. So from that level, we've come off to trade flat.
But I guess we can't really complain much, Rima, because from the lowest point where this rally actually started, we were around 4,500 thereabouts. It's been about 750, 800 points almost. So maybe today is one of those slight pause days. So not too bad. I mean, for the time being, Nifty is absolutely even, Stephen. Not moving too much. You have some tech on the upside, which is supporting. Some of the life insurers that were negative yesterday and this morning, they've decided to turn around. You have the consumer side of the market, which is now looking at some profit-taking stocks like Trent, etc. They are slightly lower. Nigel's also with us. Hi, afternoon, Nigel.
Well, that's right. And since it's a Thursday, it's not the Nifty expiry, but it'll be the sensex expiry. So that as well swings things around a little bit. So we'll have to keep an eye out on that front. But some green, I think you'll have to take that. With the kind of rally that you've seen, at least you're not seeing any big down day. Breadth of the market as well, pretty okay. So par for the course, I would say.
Absolutely. And, 25,350 is now where we are at. So it's a action-packed next 60 minutes. As I said, focus very much on single stocks and what's happening there. Indices and sectors, IT and pharma, counters in focus. PSU banks, autos are seeing some selling pressure. Just reversals. PSUs, for example, have had 2 good days. Poonawalla FinCorp, of course, is that big shooting star, which we will address right on the top of the show. Promoters increased stake. We'll also talk about Cohans, where there has, of course, been that large block which has taken place. Those are the 2 stocks which we'll address in the first 10 minutes, 15 minutes of the show. And of course, we'll have more coming up as we go along through the course of the show. A detailed analysis of financials coming up as well on the program, and Glenmark there in focus. How should you position yourself in the last hour here? And let's get to Mitesh for some help with that. Mitesh, what do you suggest?
Yeah. So, the market, as you're rightly pointing out, has slipped to simple from the highs. But again, nothing negative. So maybe we didn't kind of hit 25,500, we were about 50 points lower, and a mild profit booking has happened. But I think, a bit more of decline, and you would want to explore some longs. Now, the current level where the supports come in is close to about 25,260. and you're at about 25,350. So another 30, 40 points lower, I think that's the time when I would want to go long in the index. On the stock side, I have two buy calls from pharma sector. In the pharma, I think is showing good continuation. So buy here with the stop at about levels of 1104, and the target of around 1160, 1155, 1160 can broadly be looked at. And Dr. Reddy is also showing good signs of upward continuation. So buy here with the stop at 1304 for targets of 1360.
Mitesh, anything on the IT charts? The Nifty IT index is holding up in the green, but it's come off from the highs.
Yeah, we have had buy calls on a couple of IT names, Infosys, TCS, and I think yesterday was L&T Mindtree. The one which can possibly give you a fresh is HCL Tech. It needs to get past 1505 levels, and today I think the intraday high was on 1503. So that the chart is now showing signs of a bottoming made, a breakout or a reversal will happen about 1505. So that's one on the radar. The other one which I like is Naukri or InfoEdge. It's making some kind of a contraction pattern. Again, the breakout happens roughly about the highs of 1400, and I think yesterday the high was 1401.90. So 1402, if it starts clearing and trading below that, beyond that, then I think the stock can possibly head towards 1475, 1480.
Okay. All right, Mitesh. Thanks a lot for that. Well, let's focus on one of the big movers today. That's Poonawalla FinCorp. That's buzzing in trade. Gaurav joins us to tell us about the fundraise that was, earlier already had taken place, but now that conversion is there, and now the company receives the money. Gaurav, please take it away.
Well, as definitely Poonawalla FinCorp is soaring up in trade, and the reason being that promoter has infused 1,500 crores in the business. So let's understand, on July 25th, when they actually reported their Q1 numbers, they said that they will be infusing 1,500 crores at a cost of 452 rupees per share by a preference issue, and they have now executed it, and that is the reason why market has taken it as a positive trigger. If we look at the entire transaction, they have issued around 3.3 crore shares at a price of 452.5 rupees, and with this is going to increase the promoter holding from 62.4% to around 64%. Let's also not forget that this transaction is actually book value accretive, because the book value per share that increases almost by 13.5% after this transaction. When we look at some analysis, analysts also believe that the capital adequacy ratio that will also go up to around 24%. And let's also not forget that the timing is also important here, because in Q1 we saw company reported good set of numbers. They gave a guidance of around 35 to 40% AUM growth, and just before second quarter's results they have infused this money. So definitely all these triggers are helping the stock. Currently, as we speak, it has crossed its all-time high level as well.
Okay, all right. Thanks a lot for that, Gaurav. Well, let's welcome Deven Choksi, who joins us on the show. Hi, Deven. Good afternoon. Good to see you in. What's your view? Poonawalla, spiking up on large volumes, and it's a bit of a booster shot that's come in. Tell us more.
Hi, Nigel. Good afternoon. Well, in my understanding, I think this is largely helping the company in building the better capital adequacy ratio from close to around 21 to 24. So that is where probably I think the level of confidence one is getting that the company would be expanding faster. If you look at the last quarter's result, I think they have probably expanded the AUM faster, and that's probably the reason for which infusion of capital, so that they can leverage their balance sheet further, and in turn, I think size of them can be grown better and bigger. As this point of time, I think the valuation is already at a level at which I think it's sounding expensive compared to the other peers in the industry. They're at around 4.2x kind of a valuation price to book. So from that perspective, if you look at it, I think the upside is largely driven by the news, and maybe I think the balance sheet is fairly priced, or the stock is fairly priced based on the balance sheet valuation at this point of time.
Sorry, Devin, where is it trading at in terms of valuation?
4.25x price to book.
Okay. So in the current context, not exactly cheap, right? There used to be a time when 4-5 times book was pretty, not normal, but acceptable. Not anymore. I mean, if you look at others.
Yeah, true. I think, today, I think last quarter growth, I think the exceptional growth. Maybe I think if you are comparing on a year-over-year basis, the previous year they had a dent in the performance, and that's where probably I think the results and numbers are much smarter. They definitely indicated for 35 to 40% kind of a growth. Now, vis-a-vis that, I think they ended up achieving more than 50% kind of AUM growth in the last quarter. And should that sustain, which is likely to be a possibility given the kind of fundraise that they have done or given the kind of capital infusion that they have done, I think, in the company. So from a perspective of looking at, I think, some possibilities, I think that is where probably market is excited. But as I see it, I think the valuation-wise, the book is fairly priced currently. Maybe the news flow is adding more to the tailwind at this point of time.
Devin, afternoon, Indian hotels. There were some reports which suggest that Taj is looking to sell their NYC property, The Pier, for about $2 billion. They haven't responded to the CNBC-TV18 query, but is this a material development for IHCL, and generally, what's the view on Indian hotels?
So as such, Rima, good afternoon. As such, I think the asset-light model which they want to pursue, and I think any capital unlocking exercise, I think would be more than welcome for this company. Largely to the fact that I think the asset-light model particularly, I think, is working well as far as I think their all operating parameters and the ratios are concerned. In my viewpoint, I think the company remains absolutely convincing from the point of view of in next 3 to 5 years. The room keys that they want to add, I think, is significant. And that is where probably asset-light model would make a lot of sense. If they monetize this money, I think by way of selling this hotel, maybe I think one will have to see how exactly they get deployed in some other properties and growth of the business. But yes, I would accept it. Yeah, I think the money received would be, I think, far more significant because the size of the money is somewhere around $2 billion.
Okay, that's Indian hotels in focus today, on the back of a possible divestment of that New York property. Devin, hi, good afternoon. Good to have you in. Interesting moves on a couple of consumer stocks today as well. Not the obvious FMCG names, but I'm noticing some of the other movers. Let's pull them up. There's Bajaj Consumer. That stock's up about 9% as we are speaking from the house of Bajaj. Decent move over there. There's Heritage Foods, the dairy company, which is up about 7%. And then there is Restaurants Brand Asia, QSR being that segment, 6% up on Restaurant Brand Asia as well. So plenty of new names on the consumer basket coming through. Just very quickly, Devin, any interest in any of these names? Any thoughts?
See, the GST impact, I think, is definitely going to be felt by this company. And that's why market is justifiably excited. I'm not too sure immediately, I think, whether the companies which we are talking about would immediately show some kind of a distinctly different results. Maybe I think the test will come in October to December quarter, wherein including the pent-up demand for the business that they have lost in this particular month of September and thereafter. I guess I think it's October to December quarter with the festive demand coming in. We'll have to wait and see how exactly these companies perform. As of now, they're fairly optimistic. Many of the FMCG companies are talking about valuating this entire business by not changing the price, but by increasing the volume in the pack that they are talking about. So certainly, I think the business conditions suggest better improvement for them. Let's see, but I'm relatively more confident than before that I think consumer companies are showing better performance in the second half of the financial year.
Devin, stay on. Cohance Life Sciences is in focus. The company saw about 8.9% of the equity exchange today in the morning. In fact, the block deal got upsized. Such was the demand. But separately, the stock is also being weighed down because the US FDA has issued some observations for the company. Ekta joins in with the Twin News. Ekta.
Well, yes, there is that large block which happened, and there was an upsize which took place with regards to Cohance. Separately, one of their facilities has received 6 observations from the US FDA, and hence that particular the stock is in focus on account of that as well, though we don't know how what the reply of those observations would be, and the way forward with regards to that particular facility. But separately, just a little bit about the company. Remember that it was formerly known as Suven Pharma. Advent bought the company, bought 50% stake in September 2023 for around 6,300 odd crores. It was rebranded as Cohance in May of 2025, and then there was an amalgamation of multiple companies which resulted in the entity formed. Now, a couple of drivers include the fact that it is present in the ADC market. And the ADC market, which is basically a type of cancer therapy, is expected to grow to around $4 billion by 2029 from the current $1.4 billion. And it is the China plus one as well as the European plus one market, which is expected to be key drivers, along with the Biosecure Act, which actually might come into play. So a lot going in terms of Cohance, in terms of the long-term drivers, but obviously the 6 observations would be something that the street would be watching out for, and a near-term overhang.
Okay, all right. Cohance on the radar as well today. Ekta, thanks very much for explaining that to us. That's Cohance. Since we're talking about the healthcare space, Devin, I don't know if you've had a look at this company. Do share your thoughts, if any. Otherwise, anything else interesting from the pharma space for you?
Honestly, Sulbi, I think most of the companies, including in the CDMO space, including in the API space, are adequately priced. These two areas, I think we continue to like. I think generic space in particular, the companies which are specialty generic companies, some of the larger ones like Cipla, Sun Pharma, etc., they remain relatively, I think, more sure compared to the other peers, I think, who are comparatively weaker on the prospects. So, but at this point of time, from the valuation perspective, I think most of things are being priced. Unless you see some kind of a corporate action happening in those companies, you may see some kind of a different price regime. But otherwise, I believe that I think most of the pharma companies are well priced at this point of time.
All right, Devin, I wanted to ask you about Tega. You know, they're raising closer around 2,000 crores odd. If I got the number right, the promoter entity is putting closer to under 150 crores. And I think this is one of the single largest preference issues, you know, to investors. It's not warrants, it's a preference issue. So I think, you know, in recent memory, I think this is one of the largest, it could be potentially one of the largest in history as well. They're looking at something very, very big. But the problem is, in the near term, there's going to be a lot of debt in the books, which always makes the street very nervous. What's your view on this name? They were waiting for the equity fundraise. Now we have the names as well, some notable names in there. But your view?
Nigel, I think haven't looked at this company and definitely not the plan that they have at this point of time. So would refrain from putting any answer. Maybe some other day I can come back.
Devin, you know, auto companies have been very quick to announce price cuts, courtesy GST. But stocks have already been running up since 15th of August. M&M has done very well, and so have the other two-wheelers. Is there still an opportunity? And if yes, which one?
Yeah, I think you mentioned two-wheelers, and I believe that I think Bajaj Auto in particular, I think may be interestingly positioned. The company, yes, of course, I think the price has moved up, but I think some correction in the price definitely could possibly lead to the better prospects, both in electric vehicle portfolio, three-wheeler electric included, along with, I think, the newer vehicle launch that they have done. Probably, I think this company deserves to be looked at afresh from the growth perspective, including from the export market, where they today have now 50% revenue contribution coming in, along with the NBFC activity that they're carrying out in this company. So overall, I think this company in two-wheeler space remain interesting. Tata Motors, I think, trying to correct, I think, whatever the electric vehicle related challenges that they're facing, they're trying to correct that situation. And the last month numbers have been quite inspiring. So maybe, I think, once this demerger of commercial vehicle and passenger vehicle business is completed, I believe that I think Tata Motors should be looked afresh, I think, from investment perspective.
Okay, all right. Devin, we'll leave it there. Thank you very much for joining us. Good speaking with you. It's a pleasure, as always, having you here on the program. You know, what we're going to do is take a quick commercial break here. Just leaving you with some sound bites of Conrad Saldana from New Berger Bourbon. They manage a large sum of money here in India. And we spoke with him first on the Fed, of course, etc. He thinks that the dollar weakness backdrop is pretty good for EM flows, and they remain invested in what they like, which is largely manufacturing as a theme. Listen and take that break. We're right back.
To 25 basis point cut. If you ask most economists in the US, this should be in a string of cuts coming through. I feel that Chairman Powell, while he's opened the door, hasn't given a super dovish view or max dovish view on this. Given that the dollar has started to weaken, it does give a positive backdrop to emerging markets and a lot more policy relief from an external source to countries such as India. I think you still got some pain over the next couple of months, potentially this quarter, and maybe into the end of the year with the Diwali season that starts to bottom out and starts to turn again. I think that is probably more structural for me versus trying to pick, do people rush out and try to consume? It comes down to job creation and, importantly, wages. I don't see that structurally turning. It does help in terms of the stimulus, but we'll have to wait and see. I would think into the festival season, that's going to be much more a bigger driver than seeing that people rush out on GST and any of these cuts and start to spend. That's my view from afar. It's just practical looking through markets, different markets and cycles. But it comes down to, can you see that in the revenues? And importantly, can you see that in earnings? Because the market is not cheap as much as it might have underperformed. You're not looking cheap particularly, and I think you need to see that earnings growth come through.
Welcome back. It's time now to put the spotlight on individual stocks. Harmis is now joining in. Harmis.
Well, the markets may have cooled off, but some stocks in the broader markets have definitely not. IRM Energy is one of them, and the stock was up 20% yesterday, building onto those gains now, 14% higher today as well, almost now 40% in the last two trading sessions. And today's volumes are already the highest on record. Now, almost well over 2 crore shares have changed hands in today's session. The 20-day average here is only 1.5 lakh 14.5. So volumes on IRM Energy, and today's turnover for IRM Energy is well over 650 crore rupees. That is 42% of its overall market cap and already higher than its free float market cap. The stock, despite this outperformance over the last two sessions, is well below its IPO price, which is 505 rupees. Shalimar Paints has sprung up in the list of gainers today, the biggest single day gain since December of 23, and today's volumes are already the highest since January of 24. We have already had over 33 lakh shares that have been traded on Shalimar Paints. The 20-day average is only 85,000 shares. Now, it broke above its 50 DMA earlier in the day, and the next level on the upside is the 100 DMA, which is at 90 rupees. Now, despite this, the stock is still down 32% this year, was down last year as well, so it's lost significant value over the last 2 years. Pipe stocks continue to make headlines. We spoke about high-tech pipes earlier in the week on Bazaar. Now continues to build onto those gains. Another 10% today. Now it's up well over 30% in the last 7 trading sessions. And today's volumes are already the highest on record for high-tech pipes. Over 3 crore shares have changed hands today. 20-day average is only 18 lakh shares. And it has broken and sustained above its 200-day moving average of 111. So now above all of its key moving averages. And since its migration to the main board in 2018, the stock is up over 4x in value. And a stock that saw a bit of a spike in the second half of the session is TVS Electronics. Now 20% higher on the stock, the biggest since September of 2019. And it was around about 1 p.m. when the volume started to move on the higher side as well. And today's volumes are already at the highest since June, where over 10.5 lakh shares have changed hands. The 20-day average is only 25,000. So it shows the kind of volumes that you have had. And so far this year, the stock has been up 15% and positive returns every year since 2020 for TVS Electronics.
All right, Hormoz, thank you very much for that. So it's an interesting collection of names which Hormoz highlights every day. Jigar Mistry is with us, co-founder at Buoyant Capital. Jigar, good to have you with us here. Thanks very much for your time. I just want to start with whether you think new highs are coming. And by Diwali, by the way, there's a time limit to it. Or do you think there is and maybe even bigger gains? Nothing is changed per se, except, I mean, the markets, of course, at the end of the day, about perceptions and self-fulfilling prophecies, and sometimes about outright valuation gaps, which I don't think is the case now. But maybe the former too. What's your sense?
Hi, Prashant. Normally, there is a gentler warming into the show. This time, I'm just bringing it on. But yeah, very difficult to say. See, what has changed at the margin? I think two things. One, Fed essentially coming on and cutting. You have seen the rupee move very differently vis-a-vis the dollar index. Right? In the past 20-odd years, you have not really seen dollar depreciate as much as 10-11%. And rupee depreciating against the dollar. So that's quite against the run of the play, so to speak. That happened because sort of India-specific RBI, NDF shorts that got built out. And rupee has depreciated almost from 83 to 89 levels now. And that seems to have done. So if you continue believing that dollar will depreciate over the few months to come, then the incremental emerging market flows, which has gone to China, Taiwan, and South Korea, can possibly come to India as well. You add that to the fact that your domestic flows continue to remain very strong, but despite that, we are only a little over 5% of household savings coming into equities. Now, most developed markets are upwards of 20%. US is, in fact, upwards of 40%. So if that is the trajectory we are going to follow, then possibly each Diwali we can talk about newer highs coming through.
All right. Hi, Jigar. Good to have you on the show. Jigar, cash is still at around 13.5%. You're not as convinced as my co-anchor Prashant with his interactions with all the top fund managers that the new highs are around the corner. Will you be looking to deploy that money?
Yes, Nigel. So for us, the cash is also a proportion of sort of the flows that come in. It's a bit technical, but we don't run a model portfolio. And therefore, you will have sort of median accounts at a certain cash level and the fund account at a certain other cash level. And when flows are slightly high, then those two numbers can be a little different. So cash as an asset class is something that we don't believe in, but that essentially runs down to 5-6% on a normal basis. But see, it is an interesting space because earnings per se, on the first quarter numbers, we are tracking like 6-7% growth. Now, this is a time when the base was a lot better, right? April, May, June last year were peak election season. And if on that base we are growing at 7%, arguably in the festival season, the base normalizes. And this quarter will have at least a month lost or month pushed back because of GST announcement versus implementation. So we'll have to wait till January results to see how corporate India is reacting to the pivotal shifts of the government. Right, 4.5 to 5 lakh crores, that's almost 1.3% of GDP being pushed into the hands of people should have a meaningful impact. But countries that have tried doing that before have seen some amount of lag between sort of announcement and implementation. And everyone is keen to see how that plays out in corporate India. So unless flows change, and I would argue, in fact, the other way around, that had the flows not been these strong, you would have seen markets arguably at a slightly lower level than what they are right now. So yes, waiting for chances to deploy and bring it to a slightly normalized level, but it's not as high as the headline numbers do suggest, Nigel.
All right, what about FMCG? You're at around 4.5%. That's been a relative underperformer in comparison to an underperforming market as well. Growth has not been coming about, but now everyone's talking about this big consumption boost. You have the tax rate cuts, more money in the hands of the consumer. You have, RBI rate cuts as well, and now GST 2.0. Will you be looking at upping the ante out there?
So almost entirely all of this was built over the past 3 months, Nigel, for us, because since budget, when we sort of came through, we argued that there is a pivotal shift that's happening away from capex, both at the state center level and into consumption. So we're building that out as sort of things picked up, right? So GST 1.5 to 2 lakh crore is sort of the final cadence to the entire sort of song. The song started with, states actually announcing very large freebies. And at one point, if you took all the announcements, and we did for the 16 states that went into elections, the announced freebie bill was higher than the capex bill. What they've provided for, thankfully, is only half of what they have announced, but that has still meant that the state capex has grown at a negative 4% level. Center initially, forego about 1 lakh crores in taxes, and now 1.5 to 2 lakh crores in GST. So all of this, when handed to consumer, and there are different housing, right? Like what the states have foregone versus what the center will give out are two different income housing categories. And to that end, it will impact things differently. Our base case still is that it impacts discretionary consumption a lot more than staples. I don't think people will go out and buy more oil or soaps, but consumption can play out. Like the last time I was on the show, we did discuss cement as being one of those. Secondly, automobiles can be interesting. The third part is sort of, a lot of these exhibition houses can be interesting. So we need to sort of see how this plays out. And therefore, we were keen to get a clearer picture from the quarterly numbers rather than high frequency data, because high frequency data tends to be a little more anecdotal, doesn't give you a really good picture about where the transition is at what stage.
What about autos? You said it looks interesting. The GST rate rationalization is a big tailwind, yet you're underweight. Your exposure is just 1.2%. The expectation is that it's going to be a good festive season. Companies have passed on the benefit with rate cuts. So what makes you cautious?
No, Rima. So this weight was close to 0% until a few months ago, right? So the way we run this fund is not really benchmark hugged in any way, shape or form. So if things look interesting to us at the margin, then that's where weights go to. Historically, we did mention that the way we have played this has been auto ancillaries, because most of those businesses were fairly expensive. And what GST cuts do is end up sort of, incentivizing production and incentivizing sales rather than, growing margins in a material fashion. So at the margin, I think things are looking reasonably decent. There are still pockets, I would say, of embedded value, right? Because the PE and VC firms have still sort of sprayed and prayed for the EV ecosystem to play out. I don't think there is a huge play in any of those companies where the embedded value is a large part of your total market valuation. But at the margin, I think some things are getting a little more interesting.
Jigar, hi, good afternoon. Good listening in to you so far. I'm just wondering if you're willing to buy platform companies, including the new listing at 100 PE. What thoughts on consumer tech, internet, whatever you call it, this class of companies?
Right, Surbhi. So they say, right, PE is a state of mind. So,
is it?
It can be. So no, frankly, it's not something that. One thing sort of it does matter is that whenever you are discounting a lot of these businesses, the terminal value matters a lot. So it's not as much as the business that is changing today, as much as it's the belief that the terminal sort of US rates might still end up looking way lower. And given that India is now, 100 basis, so prior to the cuts yesterday, the policy differential was only 100 basis points. So repo and the Fed fund targeted at the upper bound. That I think gives room to RBI to cut as well. And when you discount this high duration cash flow streams, right, even by a very small margin, then the valuation looks way higher. So I think today most of these businesses are sort of responding to how the interest rate movement is rather than really a business change per se.
Jigar, very, very quickly, I know you have a theory on why the dollar has fallen. But why is the rupee fallen against the dollar and how that connects to foreign flows? If you can run us through that.
Hey, Prashant. So see, sort of what happens is that between 22 and 25, you had rupee relatively stable. And you had a situation where, the RBI may have thought that the FI flows, which started in September, could be contained at a narrower gap. So the shorts in the NDFs, the non-deliverable futures market, increased to between $80 and $100 billion. And they had to sterilize all of that through domestic liquidity crunch. So the LAF window went almost a 3 lakh crore negative number. And I think that sort of has been caught out in a meaningful manner. Then US sort of situation came in and FI, FDI continued to remain very bad. So net, I think the 1.5% depreciation we saw played out over the course of the past few months for 3 years compounded. And I think rupee may have sort of hit its high or depreciated the most it would in the next sort of few months. So things should start looking better from here. And, we have put out a fact sheet which said that every time dollar has appreciated, developed markets do well. And when it depreciates, emerging markets do well for the past 35 years. That has happened, except it hadn't come to India, which I think could change over the next few months.
Okay. All right. So worse of the rupee depreciation in that sense behind and lesser depreciation from here on. Jigar, thank you very much. Good conversation as always. And look forward to speaking with you on our next interaction. 90 points, by the way. Actually, as Jigar was talking and we were putting up a lot of intraday charts, they all look like this, the Nifty on your screen now. Nifty is basically picked up sharply in the last 20 minutes, basically, since from the point that we started. And maybe, after a break, we'll run through a bunch of these names, but they all have gone vertical, some a little bit, some a little bit more, but it's showing up on the index as well, 25,421. Take a break. AI is the flavor of the season, and Tech Mahindra's CEO and MD Mohit Joshi has backed the technology for its various sector-agnostic use cases. Listen into Mohit, the rare voice, but we had him on CNBC. Step into that break. See you on the other side.
I think obviously it is a very transformational technology, right? And I feel it has really the potential to deliver very significant benefits for all enterprises. The way we think about AI is that it is slowly moving from the lab. So you hear a lot of people talking about proof of concepts, but now large companies have actually figured out that if they really want to implement them in their core systems, it requires a lot of work to build out your data estate, to simplify your application estate. So it is going to be a journey. But at the end of the day, from the journey, you will get benefits in terms of productivity. So you have higher productivity. People talk about the contact center, but you also have developer productivity, back office productivity. So if you think of it in terms of an insurance company, this probably means that you can sell the policy and service the policy a lot cheaper. Then you've got the ability to deliver transformation, right? So if you're able to understand your customer landscape, for instance, you're able to sell more products to the same customer, right?
Welcome back. So, a quieter day on the street today. Let's figure out what's been happening in the F&O market. Nigel's, looking at the details over there. Nigel, what's going on?
Well, the markets was a little bit jittery. The one that got a lot of shots into the system was on the Nifty bank. And just take a look at that. As the markets have gained momentum, those shots are getting squeezed out there. So the Nifty bank is trading higher in today's trading session, but the open interest is sharply lower. I think close to around 6% shedding is what we've seen in terms of open interest, clearly indicating there's a bit of a bounce taking place out there. Now, the Nifty bank has been trending up. Now it's in that congestion zone. From the high, it's come off a little bit. This 50 and the 100 DMA, if you just pull up the chart, you'll see they're out there. We're facing some kind of resistance. So a couple of 100 points, if the Nifty bank can move up from here, then we could possibly see a bigger short covering bounce. That's the range that you're looking at. In terms of the options data, there's a lot of activity, both at the 25,400 call and the 25,400 put. Now, on the call side, there is a mix of activity that's taking place out there because the premiums ballpark close to around 100 rupees or thereabouts. So there is some writing as well that we're seeing at that level, which tells you that the 25,500 level is going to be an extremely important resistance mark. However, on the downside, there's clearly writing being seen at around the 25,400 put, and the premium is getting eaten too, which tells you that at around lower levels, 25,250, 25,300, that's where the nearest possible support is at, looking at the options data. Moving to the Reliance industry stock, well, that's more or less flattish today. That as well as getting into that vicinity with that 50 and the 100 DMA, which is close to around 1.5 to 2% away from current levels. It's seeing some kind of resistance out there. So you'll want Reliance Industries, which is almost an index by itself in the Nifty, a large constituent out there. You'll want it to get past that mark. Moving to stocks then. You have Eternal. That's coming for a bit of a short covering bounce. The stock is currently at the high point of the day, and open interest is a little bit lower. However, there is some fresh buying seen on a couple of new entities, which we normally don't talk about. So on the stock future space, whether you look at KFin or Mankind Pharma, both of them are higher with a good amount of open interest built up. So we'll keep an eye out on both those two stocks. Now, two stocks by the end of today, you'll have to keep a very close eye on, and both of them are in the F&O band. One is RBL Bank. That stock, it appears, it's at around 80.5% approximately. That's open interest as a percentage of MWPL. And the other one is Oracle. That as well is in that vicinity of around 80 to around 81% or thereabouts. It needs to close below that in terms of open interest as a percentage of MWPL. So I'll keep an eye out on both these two stocks. It's, on the border. Either they come out of the F&O band today or potentially tomorrow as well could be the day. But both those two stocks, that's the file you're looking at towards the end of today. Back to you.
Okay. All right. And we'll get an update tomorrow, as Nigel usually does. Thanks very much for that, Nigel. Mitesh is with us with what to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, what do you have?
So I have one more pharma name. I think Dollar Slab is near the day, right? So that's looking a good BTST kind of thing. Making a fresh high as well. So we can start at about 9.5, look for 9.35 kind of a target. So, and the other one is Glenmark, which after pullback also is again moved up strongly. So BTST there with a stop at 2094 for targets of 2130.
Okay, all right, got that. Mitesh, thanks very much for the update. We'll see you again with the market tomorrow. You have a good rest of the afternoon. Let's move on. We've got some more pharma stocks in focus today. Ekta is back with us to tell us about Glenmark Pharma. A couple of updates coming in over there. Ekta?
Well, yes, Glenmark is in focus because the biotech company Astria Therapeutics has announced a positive initial result from the Phase 1A healthy subject trial of a molecule under development, STAR-0310. Now, the results were announced at the European Academy of Dermatology and Venerology. Now, why exactly is Glenmark in focus? Because Glenmark's arm, Ignis Sciences, had entered into a licensing agreement with Astria in October of 2023, and the agreement was to develop a portfolio of monoclonal antibodies which are targeting a certain segment, OX40, for inflammatory and immune diseases. So basically, this particular molecule was out-licensed by Glenmark's arm to Astria Therapeutics, and now they've announced positive Phase 1A results from this particular molecule. Now, Ignis, remember, had received upfront payments of $320 million based on potential milestone payments plus low-digit royalties. Now, Astria had gained worldwide rights to the drug, and this means that if in case they are successful in terms of the further phases going forward, then Glenmark could potentially gain if in case this particular molecule does meet the certain milestones that they've come in contract with, or in terms of any kind of double-digit royalty opportunity. So positive news for Glenmark based on this particular molecule that they had out-licensed in 2023.
Okay. All right, Ekta, thanks for explaining that to us. Glenmark up 3% this afternoon in news today. Let's quickly move on. Now, the Reserve Bank of India has tightened payment aggregator and payment gateway guidelines. What does this mean for some of the listed entities? Let's find out. Gaurav is here. Gaurav, explain what this means to us.
Well, first let's understand what RBI has said. The guideline says that the payment aggregators shall aggregate funds only to merchants with whom it has contractual relationships. So let's understand with an example. Earlier, via payment aggregators, you could pay bills, electricity bills, mobile bills, and at the same time, you could also pay rent. Now, what's the catch here is that the rent was also paid using credit card, and now with these new regulations, rent cannot be paid using payment aggregators, specifically via credit cards. In fact, RBI says that they have to be onboarded as a seller or merchant. It is not just about KYC, but it's also about the category that they are falling in. Is it something new? Well, these restrictions were imposed 2 years ago, but there were some grey areas because of which the payment aggregators were still able to offer services to pay rent via credit cards. But now with these new regulations which are very clear, all these activities has to stop. In fact, we have seen payment aggregators like Cred, they have completely stopped such activities. Other than that, let's also take an example as how it is going to impact the listed players like SBI cards. For SBI cards, if we go back 2 years back in time, they said that from the retail spends that they have seen, almost mid-teens was the contribution of the rent payment as the spend for their card. In fact, they also used to charge around 200 rupees for each rent which was paid via SBI cards. And now with this move, this will stop completely. The SBI cards company earlier said that the growth has been moderated a lot, but at the same time, now analysts believe that EPS is going to get impacted going ahead because this has now stopped completely. It could be somewhere in the range of 2 to 3%. It is difficult to quantify right now, but definitely that is something as an impact what we can see on the companies. As of now, we do not have any number. We will be definitely watching out on how companies going to address this issue, but we can actually see some kind of negative impact on the companies like SBI Card because of this move.
Thank you very much for that. We'll wait by to see what the company has to say about the potential impact. For now, it's time for a break. As we do that, let's listen in to opinion coming in from Goldman Sachs Global Emerging Market Equity Strategist Sunil Kaul and his view on the Indian markets, the impact from the GST rate rationalization and the sectoral picks.
I think obviously the second quarter reporting season was generally pretty decent. The bar was low, but I think we got the underlying earnings growth of around 12%. Our full year number for calendar 2025 is about 11% earnings growth, and we think we are kind of on track to meet those. We have started to see in the last couple of weeks sort of earnings upgrades in the consumption space, notably in staples, in discretionary. And so I think the sentiment is starting to improve. When you look at the broader market, there are still more downgrades that have happened in the last 1 month since the GST announcements. Then we have seen upgrades, which means the net sentiment is still sort of in the red zone. Our sense is that in general, it could improve India's earnings by 1 percentage point. It sort of looks a bit low, but it's because it's concentrated in consumption, and large parts of the other markets do not really benefit from GST. But net, that should be accretive for underlying earnings. We haven't raised the numbers a lot because some of that gets shaved in because of lower growth on the infrastructure side and the continued uncertainty around tariffs. So net, we still think overall there is a net positive earnings impact from the GST overall for the market. As I mentioned before, even after the personal income tax cuts that we saw through, we already had positioned in terms of liking the consumption sectors over investment sectors. And so we are overweight staples that should benefit from the GST cuts. We are overweight autos. We do pick up some of the QSR and the tourism and the internet names through the overweight in the internet or the TMT sector in general. We also are overweight financials. So I think financials and consumer sectors are where we have our sort of most positive views on. On the other side of the ledger, we are underweight infrastructure, excluding defense, which is a structural theme, but the rest of the infrastructure path, we are underweight pharma. And so we have a clear preference of consumption, our investments there. We are neutral IT, realizing that it has come off a little bit, but we think it may be a little bit too early to position there.
Welcome back. Well, markets are doing quite well, currently moving back to the high point of the day. And it's turned, from a sell on rise market to a buy on dips market. You need to build positions as the market sees some kind of profit taking on an intraday basis. And then we are seeing that the markets do recover. So that's the way things have turned. Sid Khemka, Head of Research, Wealth Management, Motilal Oswal joins us on the show. Hi, Sid. Good afternoon. Good to see you in. Let's talk about Biocon. That's a stock that's in focus today. They have gone ahead, they have secured the US FDA approval for its biosimilars, Prolia as well as denosumab. What's your view on the stock? We'll be speaking to the management tomorrow, but your view?
Hi, good afternoon, Nigel. Glad to be on the show. I think within the pharma space, the biosimilars, that has been consistently doing well. And specifically, if you look at Biocon, consistently now they have been getting the regulatory approval first for the Malaysian plant, then for the Bangalore plant, and then back-to-back US FDA approvals for some or the other products. So what we are seeing is that They are definitely scaling up their capabilities in terms of approvals, the plant capacities, and they are targeting to the 50-60 ton demand surge. So in-house manufacturing aims to de-risk the supply risk and positions Biocon as a key supplier, especially in the GLP-1 APIs. And with significantly lower manufacturing costs than compared to some of the innovators, we believe Biocon is now pursuing both the CDMO as well as the front-end models for the semaglutide formulations. The injectable forms, that is something that has been picking up well. The product pipeline for biologics remains promising. Plus, it's within its subsidiary, the Syngene subsidiary, that is expanding in the CDMO capabilities to meet the rising demand. So overall, we see a strong revenue growth, margin improvement, and that driving a very high growth in the net profitability over the next 2 years. So we remain very positive on Biocon. We have a buy rating and a target price of 410.
What could be providing this boost to the Indian markets in late trade is that statement, some growing optimism about a potential resolution to the ongoing US-India trade tensions. V. Anantha Nageshwaran, the Chief Economic Advisor, has spoken at the Bharat Chamber of Commerce in Kolkata. And what he says is that perhaps we could see a resolution at least of that punitive 25%, the extra penal tariff of 25%. He says, I don't have any inside information, but my personal confidence is that in the next couple of months, if not earlier, we will see a resolution at least of the extra penal tariff of 25%. So that perhaps is the heart of what, the up move that we've seen in the markets in the last, 30 minutes or so, because the Nifty has suddenly spiked up close to about 100 odd points. He says, my hunch is that in the next 8 to 10 weeks, we will see a solution to the penal tariff imposed by the US on the Indian goods. So that, it's just a statement to be taken on board. Again, giving credence to growing optimism that we will see some relief to the tensions between US and India. Siddharth, there is also a lot of optimism surrounding IT. One, the dollar index, has slipped. I mean, I know the rupee is also underperformed. It's depreciated, but generally the dollar index is down 10% on a year-to-date basis. We've, the potential rate cut. I mean, we've already seen one rate cut. The Fed is guiding for 2 more in the next 12 months. Is there any stock which is a buy for you in the IT pack?
Yeah, Rima, I think that's definitely a welcome step, not only the rate cut, but the positive commentary from US Fed. I think 2 more rate cuts in this year. I think that is something that the street is very excited. A rate cut in US straight away gives a lot of room of or clarity for at least increasing spending for the IT discretionary companies, which have been reeling under the uncertainty with regards to the growth in the developed markets on the backdrop of the tariff war. So definitely, I think this gives us positive sentiment. Nonetheless, the Q2 numbers are ahead of us, and that could be a kind of a dampener, at least in the near term. But I think that will only give us an opportunity for the investors to get into a sector which has consistently done well. We have seen very strong cash flows, dividend payouts, and now the Infosys buyback. That is only trying to indicate that the management believes that the downside from here is limited. Hence, we believe that this could be a good play to see the recovery in the global sentiments, especially in the US markets after the series of Fed rate cuts. What we like, we definitely are in favor of the mid caps where we see stronger earnings growth, niche presence, and a lot of efforts that is going into the other new age AI-led transformational services. So what we like, Coforge is something that we like, is one of our preferred picks. Consistent earnings growth for this year. We are seeing a strong earnings growth of about almost 60-70%. Next year, a 25% earnings growth. Valuations, although a little bit on the higher side, but we still believe that the stock could see a good, decent upside. We have a target price of 2,200 on Coforge. That's the top pick from the IT space.
Okay. Siddharth, thanks very much for all the advice today. Well, we just have 2 minutes to go before the day closes out. And actually, it's turned out to be yet another good day. Rima was complaining when we started the show that it's very quiet, not too much is moving. The Nifty said, hey, Rima, don't worry. I'll give you another 100 points today.
And back to where we started.
And at least back to where we started. So it's not a bad session at all. Nifty's again incrementally put on almost 100 odd points, inching its way towards the 25,500 mark. Let's talk about the gainers. The platform companies are definitely in focus. Eternal actually going home as the Nifty winner, 3% higher on Eternal. Let's just pull up Urban Company and Swiggy as well to see what the others have done. Swiggy has been up about 1%. Urban Company also has notched up another 2% sort of a gain. So platform companies definitely in favor. The life insurers, HDFC Life and even SBI Life, they've started seeing some traction now. Sun Pharma, after Citi's positive commentary, gaining 2% today. Some of the IT names recovered, helping the overall market. So Infosys, for instance, going home with a gain of about 1.3%. There are other big boys as well. HDFC Bank, ITC, HUL. So plenty of different legs to this move today. Eicher Motors from the Auto Pack also looking pretty good. On the flip side, Coal India, Bajaj Finance, Trent, Tata Motors. These were some of your losing stocks on the Nifty. So that's the large cap tally. Mid caps also had a great session, actually just under 0.5% up on the mid cap index. And today's fast movers include names like Poonawalla FinCorp, 13% up on Poonawalla. Tata Investments, 6% higher. Names like Subros. And then some of the consumer companies, like I was pointing out earlier, Restaurant Brands Asia, Bajaj Consumer, gains between 7-8% on many of these names. So overall, plenty of traction and excitement in the mid-cap market as well. Well, the bell has gone, the day has come to a close, and the Nifty has made its way towards the 25,421 mark. On that note, we take your leave on this edition of Closing Bell, but do stay tuned. All the market action continues. Up next is Markets Forward.